we are going to have another crash. In this video, I'm going to break down why we're going down. I'm going to compare it to the last crash that we had here, and I'm going to anticipate when a triple OR block fill setup is likely to form. So first off, why are we going down? Well, we have now reached standard deviation of our anticipated OR block. This move there, that's our OR block, and that's the measured move coming from this. Right, now what would we have liked to see here? We would have liked a bunch of liquidity here forming ahead of tapping into this order block, respecting this order block. Instead, we got a move breaking that low, validating this as a bearish order block instead. And the order flow from this has just continued to be bearish, building a bunch of fake uh, short positions for retails, taking out all these swing lows. Every single time we take out the swing lows, people go short, and those are setups being formed because stop losses are being formed, right? Double top, all of that. Now we went up and we swept those stops with this move here. Now, what I anticipate is going to happen, and I'm going to show you how this bait of liquidity and engineering has been done before 2025 crash. Basically, with this pattern, what's likely to happen is we're going to get some sort of fake breakout bearish. We already have this breaking down below here. People are going short, stops above there. So I anticipate we will get a breakdown below this trend line here. People will go short, they will have their stops above there, and then we're going to respect this lower time frame order block high, and that's when we are going to form our second order block. Or we haven't validated this one yet. It's possible we will sweep even this high. I don't think it's as likely. So basically, down, breakdown trend line, people go short, sweep those stops because they will put their stops above there, right? And people will be bullish there. Perfect for smart money, right? That's what they want. That would be a likely setup. So look for a 4-hour order block to form post sweeping that high. 4-hour bearish order. Now let's compare this structure to the 2022 crash and the 2025 crash. What happened here? We built out a bunch of liquidity in the same zone. Now, I don't anticipate this crash to be as steep as the last one because it's not time for that crash. It's not in the standard deviation of the higher time frame. That crash came after we hit this manipulation move, standard deviation, right? What happens then? Same pattern. Start getting a bunch of fake outs bearishly. By the way, I called this in my first ever video. That's what that video is about. I called the last crash. I'll call this crash. Um, but basically, yeah, we get all of these double tops here. What does that engineer? What happens? People go short, stops. People go short, people go short, people go short, people go short. Breakout, breakout, right? Stops above here. That's where stops are. What happens? We sweep 4-hour order block, validate entry. Boom. That's our swing position. I told you all this before. And how long do we anticipate it to go? The standard deviation. Oh my, that's crazy. It's there again. Yes, it is. Now, where could we draw towards? One alternative is here. That's the more bearish alternative, but that is the untapped order block that we have, perfectly aligning with a bunch of untapped liquidity. The second alternative is that we will go down here towards this order block right there. Now, in the 2022 crash, it was the same. What happened? We reach our mesh standard deviation, right? We get the same kind of double tops, bunch of liquidity engineering, right? People go short, double top, sweep that, fake out, boom, people go short, stops above there, Sweep that, boom, 4-hour order block right there. Now, I could show you just for your convenience. This 2020, yeah, 2022. Sweep all this engineer liquidity we built up, and we get this 4-hour order block. Why? Same principle. Fake out, people put their stops above there, sweep those stops. Validate order block, boom, entry. Lower time frame, swing. And we hold it towards our standard deviation measured move. There. Pretty damn good swing, trade, risk, reward in it. Now, when can we anticipate this setup to form? I anticipate this setup to form, as I told you, with a breakdown coming here, below there, and then a, yeah, so probably next week, some kind of accumulation might be possible, another break below internal range high, but basically something that engineers more people to go short. And their stops are where? Yes, you're thinking right. They're right there. And so, something to engineer shorts, fake out up, look for a 4-hour order block right there, but then the big move bearishly will come. Now, which order block do we want to look at as the measured move? Well, right now, I'm looking more at this one as the measured move, but usually it is the propulsion block, and this is probably where banks are going to position. So let's say we get a move below this, and then we come back up, sweep this high, maybe even both of them, then that would be our move, which aligns very good to this. But that is why I logically think we are going to crash. What would need to happen for me to be wrong? Oh, sorry. If I am to be wrong, I would like, basically, we have this lower time frame order block right there. Like the bullish scenario is we took out this order block, boom, standard deviation. That's the next manipulation move, bounce off this order block, and then now what what it's doing right now is it's going to like do the reverse probably. So some kind of fake out bullishly, people go long, they'll have their stops below here, um, and we will then go lower, take this trend line out, and then we would validate the newly formed order block, if that makes sense. So up, down, validate order block, support, pursue, break this high. Yeah, that's about it. How will this contribute to crypto? Well, what I'm seeing in crypto right now is this is the order block we've been referring from, right? A lot of respect in that standard deviation zone. And then we go, and this is our entry, as we know. We get the order block, liquidity above order block from order block. Do we have the liquidity above this little order block? Do we? No, that's what is building right now in Bitcoin. And what I think would be good for a bearish trade here is we break down below there. People go short where they have their stops above there. And we sweep that. From there, you look at a 4-hour trade, like 4-hour order block being formed, and then you hold that towards this low at least. But let me see. This mission move. Yeah, I think until this low, probably we sweep a bit inside our block. In yeah, that's it, I guess. If you want to see how I call the last crash, I'll put my first video where I did call it 2025 crash in the video, and you can watch that or don't, up to you. And hope you learned something in this video and it put your mind to work. Wish you all the best.